Up Hyperchange, welcome to another episode. Today we've got an epic interview lined up with Alex Mashinsky, CEO and founder of Celsius Blockchain. We're going to learn all about lending out your Bitcoin in this whole new space that's disrupting banks with a new decentralized system. Super excited. Alex, welcome to the podcast.
Thanks for having me.
Yeah, so I'm not even an expert on Celsius myself yet, but I'm super curious about what you're doing because it's sort of scratching the surface of like, once you have your Bitcoin and crypto, what can you do with it? How is the banking system around this new crypto stuff evolving? And I feel like Celsius is really leading the charge in that direction. So for those of us who don't know Celsius and have never heard about it, could you explain like what it is and why you started it?
Sure. Yeah. So crypto basically had two killer apps since it was created. The first one is the store of value. So Bitcoin is obviously the lead crypto with the largest market cap, but the main purpose of Bitcoin is storing something that is not in fiat and hoping that it's going to appreciate over time. What Celsius focused on is yield. That's, we think, is the second biggest killer app for crypto. You can't get yield from your stocks or bonds or your bank or your insurance company. You used to be able to do that, but it's no longer basically available. And because of that, we wanted to create something that enables you to just earn yield on your digital assets. So that includes obviously Bitcoin and Ethereum, but also stable coins and staking coins and so on. So Celsius invented the category. We support 42 assets. So we manage about 17 billion, more than anybody else. And we've been paying yield to the crypto community longer than anybody else. So that's really what we stand for. We also issue loans. So you can take a loan against your Bitcoin, not have to sell it and pay taxes. You can defer your tax, take a loan, pay 1% per year instead of, basically get rid of or sell some of your coins.
Yeah. And we always hear about how Bitcoin and all this stuff is like, equalizing the playing field, letting you get access to all this amazing value that your capital has. And I think it's so interesting that like, okay, the banks are going to lend it out, 10 to 1 or something. They're going to take your dollars and lend them out. And there's all these middlemen. And then you're getting like this fractional interest rate. And you're basically saying we can cut out all of those middlemen and lend out your Bitcoin and give you that yield directly. And so instead of getting like this 0.1%, you're able to offer like 6 to 8% and truly kind of like give back the value to the people. So I love what you're saying about the first use case or like the first sort of killer app of crypto. And that's what's got me so fascinated is like, okay, holding Bitcoin's one thing, but all of a sudden, if you're getting an income stream about it and able to monetize it, that seems like it could seriously increase the adoption and sort of appeal of Bitcoin. And I feel like almost like even me, like I've been in Bitcoin forever. I have my Bitcoin, but it's just sitting in Coinbase. Like this isn't even something I've started to do yet. So I'm kind of curious if you could explain a little bit more about like, how does this work in the traditional finance world? And then how does the Celsius of the world, are you doing it totally different and how that enables you to give the higher yield?
Sure, yeah. So let's take, and you can see on my shirt which side I'm on, but basically your traditional bank, let's take an example, JP Morgan, right? So you might have a Chase credit card and you probably are paying 24, 25% interest on that card. And so about 5 or 6 years ago, when JP Morgan had to pay 6% to borrow money, and maybe that was justified, but now the Fed has lowered the rate to 0. So why didn't they lower your rate from 24% to 18% or 16%, right? So the banks are reporting all-time record profits. Every quarter you can hear these big banks recording. They're bragging about how much money they're making. Well, guess where they're making all that money? They're making it because they're paying you 0.1%. So they're making huge amount of profits. All those profits go to their shareholders and to the employees of the bank, nothing to the depositors, to the users of the bank. So all Celsius did is said, wait a second, if we do the same functions that banks do, and instead of taking all that profit and giving it to the shareholders or the employee, we give it to the customers. We create a Costco version of your bank. Will anyone join? Right.
And can you explain the Costco vision? Because I've heard you mention that a couple of times and I love that. Big fan of Costco.
Yeah, so Costco is an American thing where there's a giant warehouse, and the Costco employees went all over the country and curated the best quality products at the lowest price. There's no markup, right? You get a giant cart, you fill it up. You don't have to worry about the price of the orange juice or the toilet paper or anything that's there. The bananas, whatever you need, you put it in as fast as you can. You go to the checkout, and you walk out of that warehouse knowing you got the best deal ever, right? There's no way you can get those products at those prices anywhere else. Why? Because you trust the brand. You know that the Costco team, you pay them an annual fee, and basically you get everything inside the warehouse at a cost basis. There's no markup, right? So that experience, that customer commitment is what Celsius is all about, right? So we basically created a warehouse of financial products instead of a warehouse of physical products, filled it up with the best things that are always in your best interest. And magically, when you do stuff in the best interest of the customer, of the community, you discover that 9% interest or 10% interest is not some interest paid to you per year is not something that is a dream. It's actually, that is the true cost of capital. That's what institutions and exchanges pay us when we lend them your digital assets. Now, just to clarify, maybe 1% of the population is comfortable owning Bitcoin directly like you. But 100% of the population wants to earn yield on their dollars. And until recently, that was not possible. But today, you can take your dollars, buy a stable coin with it, like USDC or TUSD or PAX, which is another stable coin, deposit it in a Celsius wallet, earn almost 9%. And your bank pays you 0.5%, right? So it's almost 20 times more than your bank. So the question is really, who is misleading and lying to the customer? Is it the bank or is it Celsius? Because somebody must be lying. If somebody can pay you 20 times more, somebody must be telling the truth and somebody must be lying. And that's really the main question for 100% of the population who right now scratching their head and saying, nah, it's too good to be true.
Yeah. And I would say I'm in that camp too, because I'm like, what is the credibility of that yield? Like, what are you actually doing with that Bitcoin? Or, let's say I put in my Bitcoin with Celsius, like, what are you doing to earn such a high yield?
Right. So Celsius, again, is a membership organization, right? We have almost 1 million customers from all over the world, 170 countries. And I'm the largest Celsius user. I personally have over $300 million of my own money in Celsius earning interest.
Wow, love that.
Right. Okay. So this is not like if you asked a bank CEO, if you said, okay, are you the largest customer of your own bank? They would laugh at you and be like, no, my job as a CEO is to take the largest salary possible out of the bank, not earn the much as possible as a user. You crazy? As a user, you got paid nothing. Why would I use my own bank? Right? So the whole community, the whole idea of a bank is not what it was really created for. Community banks and trust companies were created to help local communities basically make sure that you could issue local mortgages, help the pizza shop, build the basketball court in the school. Not all that disappeared. None of that exists today, right? Today, national or global banks are in business just for one purpose, and that is to extract tolls and fees out of the customers and deliver that profit to the shareholder. That's the entire purpose of the bank, right? Mm-hmm. And every 10 or 15 years, we have to bail them out because they take too much risk, right? And people tell me, well, the FDIC is there. The FDIC has never bailed out a bank. All the bailouts since the 80s, I've been in this country since 1988, every bailout without exception was us, we the people, the taxpayers, bailing out the banks. Doesn't matter if it was 2000 or 2008 or 2019. and so on, so on. So every time money is being printed, we give it to the same people who basically failed us. They get to give themselves giant bonuses, and then we start the story all over again. So I don't believe we can fix the problem by passing new laws or have this or that. The congressman or congresswoman scream at the bank executives in front of the television. That's not going to do anything. So what we have now for the first time ever is we have a blockchain, we have cryptocurrencies, we have an open ledger, and we can create a new system, a new banking system, a financial system that acts in our best interest. And since banks are not your friend, what about a system in which the customer gets the vast majority of the yield created in the system? So all Celsius done is aggregate all the people that hold USDC, which is a stable coin, aggregate all the people that hold Bitcoin, for example, and then we go to institutions, the people who usually charge you a lot of money, we go and we demand the highest rate possible, right? Because when they need 1,000 Bitcoins, they're not going to go and pull it together from 1,000 different little guys, right?
Yeah, you're negotiating on our behalf, which is so awesome.
Exactly. And since I'm the largest lender in the pool, because I'm basically the largest user of Celsius, believe me, I'm pounding them with everything I can, trying to get as much yield for us as possible. Now, most banks, as you know, have, like you said, 10-to-1 leverage, 20-to-1 leverage, which means, again, they have a legal license, a legal franchise that allows them to print money. For every dollar they have, they can print all this money that doesn't exist. Right.
I can't believe that, honestly. The fractional reserves, every time I hear about it, I'm like, is this really the rules? Like, it sounds like monopoly. Like, and then it's like, well, we have to bail out the banks. Like, I as much as I hate bailouts, I'm like, free markets, let's just let you fail and innovate. But I'm like, damn, like all my money's with Bank of America. Does that mean like all of a sudden I don't have my money now? Like, that's not ideal. Like, I guess we'll bail them out. So it's like, it sucks, honestly. We're like prisoners in some
right. We are prisoners. We're stuck inside that system. And our politicians, the largest lobby is the banking lobby. So, nothing is going to change. And frankly, it's a very, very sad story unless you work on Wall Street. When you work on Wall Street and you get these $1 million bonuses, you're like, I love this system. Don't change anything, So again, I don't think it's been 700 years of banking since the Medicis kind of created this idea of, the double entry system and this idea of lending a bank that has fractional reserves. So nothing has changed. It's got worse and worse and worse.
How are you able to get such higher yield without any leverage in your system? Like getting back to the point.
Yeah. We're not earning a higher yield. We're actually earning less than banks do. Banks are public companies in most cases, right? You can take the quarterly statement of JP Morgan and they tell you in that statement how much they're earning. And they brag about how they're making 15 to 17% return on capital. They're bragging about it. They're saying to their shareholders, not to you, to their shareholders, look, guys, we're geniuses. We took money from these customers, these idiots who give us their money for free. We paid them nothing, or at the worst case, we paid them 0.1%. And then we took it, we lent it to all these people on this side, and we kept 17% to ourselves. So when Celsius pays 8.8%, that is half of what banks can do, because they can do marginal fractional reserve. We are not allowed to. I don't have a banking license. I'm not allowed to do that. So, but I'm giving you most of that 9%. You get to keep most of it, right? Where with the bank, despite the fact that they're making 17%, they're paying you 0.1% on an average US checking account, right? Or savings account. So it's completely ludicrous at how egregious these people are in charging fees, charging inactivity fees and withdrawal fees and checking fees and overdraft fees, you name it, fee upon fee, ATM fees, right? You want to withdraw your own money? We're going to charge you for that. So we are just allowing that. We, the people, continue to give these banks our money for free. We don't expect anything back. And because of that, And the banks just continue to say, like you heard about Wells Fargo creating 3.6 million fake bank accounts, right? You heard about that?
Mm-hmm.
They got fined $1 billion. That's They made more than that in fees in 1 year. So the fine was less than what they charged their customers for like 10 years. Like, so why would that deter them from doing stupid things like that?
Yeah, it's
They'll
just the
just
cost of
continue
doing
doing it.
business is to do those fees. And so,
Exactly.
but I guess
No one ever goes to jail. No one ever gets fined personally, right? None of these people get fined. They all continue
it's the
to
moral hazard. It's just spread out. It's Wells Fargo.
exactly,
Who knows what that is? But okay,
exactly. So
so but how do you get 8% on my Bitcoin? Like
yeah,
I give my Bitcoin to Celsius, you lend it out. You're giving it to someone else. What are they doing with it? What if they lose it? Like that's what I'm thinking, right? Like how
yeah.
do I know that you're like risk management? Like I'm not getting any information on like
Yeah,
here's the
yeah. No,
strategy we're
no.
doing. Here's the credit score of that person. This is how we know we're going to get your Bitcoin back. This is our loss ratio or whatever. Like how do I get comfortable with giving away my Bitcoin, which in theory is like a huge portion of my financial, thing, like my retirement. It's all in Bitcoin. So that's like my baby. I don't want to lose it. So if I send it to Celsius, I'm like, I'm thinking through if I would be a customer, I'm paranoid of like, okay, like 8% is great, but I'd rather be 100% sure I'm not going to lose it versus 90% sure I'm not going to lose it, making 8%. Right. So how do I bridge
Right.
that gap?
So you have a brokerage account and you have some stocks in it.
Yeah.
Great. Who are you with? Who is your broker?
Vanguard and Public, the app
Okay.
Public. Yeah.
So all those people, Fidelity, Vanguard, Charles Schwab, E-Trade, all of them, do you know that they're lending out all your securities?
Totally, to the short sellers. That's how the short sellers in
Right.
Tesla get liquidity. And like
So that's
maybe if
called
I'm lucky on a good day, they'll give me like 4% of like the interest rate they earned, like if they're feeling friendly. But
99% of people don't get anything for it, right? No one pays you back. You don't get a check from them every quarter that says you've been such a great customer. Here are all, like the vast majority of the revenues of these funds is from securities lending, because the fees they charge you are actually almost nothing. Like if you look at BlackRock, which manages something like I think $13 trillion. If you look at their financial statement, 61% of their income comes from lending your stock to somebody else.
yeah,
They
I'm
sold you
not,
a
but I don't want to
Tesla.
know what the traditional financial system's doing. I
No,
know,
no.
I
I'm
want to
just
see what they're doing.
explaining. I know. I'm just
Yeah.
explaining to you how the traditional system works. We do exactly the same thing. Just instead of lending Tesla and Facebook, we lend a stable coin or Bitcoin, right? So the difference between the two is that Celsius said, we're going to give most of this back to the community. And traditional brokers said, we're not giving any of that to our customers. Like Robinhood, does Robinhood give you back anything on them lending out all of your stocks and
So,
ETFs?
so you're giving liquidity to like Bitcoin short sellers essentially on the future.
It's not. So the short seller is like the maybe 10% of the use case, right? 90% of the use case is market making, arbitrage. For example, the price on Binance and the price on Coinbase, the price of Bitcoin. Look at it at any time of the day. Are they the same? There's always 70, 100, $200 difference between those exchanges.
Great.
Who makes all the money? Somebody who can borrow Bitcoin, sell on one side, borrow stable coin, buy on the other side. That's how you arbitrage the two. So you need
Okay. Yeah, no, making sense. So you guys are like the security lender for these like AI people who want to arb out the markets. And they're like, we're going to tap into this decentralized network of
right.
Celsius. You're negotiating us the best rate. And so
So
how do
if you're a
you
market
verify?
maker, if you're a market maker, if you're an arbitrageur, if you're a hedge fund, all those people, they need to borrow the underlying asset. Okay. So normally they would go and borrow it from State Street or from BlackRock or from Citadel, right? Or from Robinhood. But none of those companies can lend them Bitcoin, right? So who can lend? Who the largest lender of Bitcoin?
You, I'm guessing.
Yes, we have 110,000 Bitcoin.
That's
Okay.
awesome. Is
If
that
you
more than
look
Michael Saylor? Almost as much.
more than Michael Saylor, yes.
Wow. Okay.
If you look at the balances on most exchanges, Celsius has more Bitcoin than balances on most exchanges. Like Coinbase probably doesn't have 110,000 Bitcoin just sitting there. You
So
understand? So
yeah.
the opportunity, again, this is one of the hidden secrets of Wall Street. How do they make money on your ETFs, on your Apple, on your Tesla, and so on, so on. So we've taken the best practices of Wall Street of how they make money, applied it to crypto, but instead of keeping all the profit to ourselves, we shared it with the community, right? So the community basically looked and said, a lot of people in the community said, 8.8% on stablecoin, that makes no sense whatsoever. Like I'm talking about 2017, right? Now we have over 100 competitors. Even Coinbase now offers 4% on your stable coins. Coinbase just launched a new service that offers 4%. Why are they paying you 4 and not 8.8?
Because they're public and they want to show great profits. I don't know.
No,
And take less risk.
because the only reason they're paying you 4 is because Celsius exists. If Celsius didn't exist, they would still be paying you 0.
Oh,
right?
you're saying okay, gotcha. And so I guess the last sort of I'm throwing a lot of devil's advocate questions here because I'm like, I
Sure,
want
sure.
to put my thing on Celsius, but I have all these things. So how do you confirm the counterparty risk of these people you're lending to? Like, oh, you're an AI bot doing crypto arb. Like, how do I know you're not over levered and going to blow up and not be able to pay me back my Bitcoin if your strategy goes wrong? So now
Right.
I'm on the hook for all this anonymized like counterparty risk for all these weird crypto arb people. Like that doesn't make me feel comfortable. So how is Celsius
Well,
managing
what's
that?
your counterparty risk when you lend your securities without your knowledge? What's your counterparty risk there?
I mean,
You
just
don't even know about it,
I
right?
think
So
Vanguard's more likely to get bailed out than Celsius if shit hits the fan. So
Vanguard is not a bank. They're
yeah,
not
but
going
that's
to
who's gonna have to that's who's assessing the counterparty risk of like I don't know.
we
Yeah.
are the Vanguard of crypto. You
So
understand? We are the largest
but
lender.
you must have a philosophy of who you lend to make sure they can pay you back, right?
Of course, yeah. So because we are large, we don't need to lend to the little guys, right? We don't work with little guys. If you are a $10 million hedge fund, we can't work with you. You're just too small and too risky for us. So
Yep.
most of our counterparties are the largest exchanges, the largest institutions on Wall Street, people who have crypto desks, they give us collateral, right? And we make sure that nothing bad happens. We went through several, obviously very severe downturns in 2020, 2021, and Celsius did not have a single default from a single counterparty, right? So
Pretty impressive, honestly.
so let me like in May of 2021, right? Bitcoin went down 53%, Ethereum was down 60%. Celsius had zero liquidations or zero bad debt with counterparties. Let me ask you a simple question. If Vanguard dropped by 53%, do you think you would get back any of your assets there? Or your bank? If the assets in your bank, if they leverage 20 to 1, right? And the
Yeah, you need a
value of your
5%
asset,
drawdown and we're screwed.
exactly.
Yeah.
So my point is that we are not backed by the Fed or by whatever. We have to stand on our own feet. We have to survive.
So that makes you stronger almost because you're not
Exactly.
relying on that. You're not relying on
We're
the
not
fractional
allowed.
reserve.
We're not allowed to do fractional reserve. We're not allowed to create money we don't have. We couldn't, right? You can't just go and print new Bitcoin.
I love it. It's like a startup that's bootstrapping for someone who got too much VC funding. It's like, you know, who's building a better company in the long run. Like, let's be
Exactly.
real.
And we did not get any VC funding.
And so if I were you, I'd be thinking like, okay, this yield thing is dope, but now everybody's rolling out a yield product. Everybody's trying to copy you. You don't want to be a one-trick pony. You want to be Costco. So how do you have the pace of innovation to stay ahead of the curve and keep leaning into this cost? Like, what's the vision here beyond just this first yield product? Because I have to assume it's a race to the bottom on this yield product. Like it's dope now, but
actually it's a race to the top. We're paying, when we started the service, we were paying 4%. And we went, and as we got bigger, we actually managed to extract more and more and more out of the counterparties, then less and less and less.
In the long run, they have to impress, right?
The opposite, no, that's not what happens. You see, let's say you are a giant Wall Street firm and you have a crypto desk, and you have $100 million transactions. How many people do you think you can go to and borrow $100 million worth of stable coins?
Tough.
One. So there's no, you think there is competition, but there is no competition. If you need 10,000 Bitcoins for a transaction, how many people you think can lend you like this, lend you 10,000 Bitcoins?
Yeah, no, so you guys, by being the biggest and sort of dominating with this network effect and that's becoming your moat, so to speak.
Yeah, so let's go through what's happening, right? So there's a flywheel here in motion, meaning the more users we get, the more deposits we get, the more we can extract out of the institutions, the more we can extract, the more deposits we get. Well, guess what? These depositors or these users, they come from exchanges. So what happens to the balances on exchanges as Celsius gets bigger and bigger and bigger? Their balances get smaller and smaller and smaller. They need to borrow more. Well, they need to pay us even more. So the flywheel here works in the favor of the community. The power shifts from the centralized exchange that kind of paid you nothing, right? I mean, you didn't even think that Coinbase should be paying you stuff. You pay them 7% to buy your Bitcoin. Here comes Celsius and says, wait a second, we can get your exchange to pay you money for your money.
Wow. Okay. I have so many questions.
We can force the giants to kneel in front of you. It doesn't matter if you have 0.1 Bitcoin because you're now part of a giant pool. So even with 0.1 Bitcoin, you're part of 110,000 Bitcoin pool. You have tremendous power.
So how do you align? I want to go like rapid fire here to end it because I have so many questions. How do you align incentives with you like Celsius, the company, and the users to make this all work in the long run and make it so like, because I love this idea of like, it's me versus the bank and like this little guy negotiating against the bank for my rate by myself versus Celsius. Like I am the gorilla. We're all together negotiating on our own behalf as this community, which is so amazing and powerful. But how do you keep Celsius aligned to give all that? Like you must be getting some value. And I'm just kind of, and you have the Celsius token too.
That is very simple. So we have three different incentives. First, it's the yield, right? So a lot of people just come for yield and they say, I don't care about anything else. Here's my coins. Give me more coins. I can leave at any time. There's no lockup. Thank you very much. Then there are people who come and say, okay, I see you have your own token. If I use that token, I can earn more. I don't have to, but I can earn up to 25% more. So great, I'm gonna give you my Bitcoin, but I wanna earn in cell token, right? Just like, so before Uniswap offered you Uni or PancakeSwap or SushiSwap offered you their token, guess who was the first company that invented this model where you can get more by using a token?
Celsius.
Celsius. The cell token was the first time that you can earn yield and basically do farming with your token. So we innovated. Most of what you know in yield is Celsius innovation. It's not somebody else innovation. We just don't run around and tell everybody, oh, we invented this thing, you know, we want to get credit for it. So 2 years before DeFi, Celsius invented yield. In the beginning, it was 4 or 5 assets. Now it's 42 assets. We support more assets and more blockchains than anybody else, right? Still today. So, because we run on 14 different blockchains, we don't just run on Ethereum, right?
Yeah. And so can you explain that to me? Like, are you I can lend my Bitcoin, but now you guys have all these tokens. Like, what's your kind of view on Bitcoin maximalism versus ETH maximalism versus like the evolution of the space kind of?
So we're not, Celsius was not created to convert people who want to hold their own keys to give their Bitcoin to Celsius. That's not the purpose of Celsius. If you want Bitcoin to be worth $1 million, you need to bring 1 billion people into crypto. And most of those people are not people that know even what a key is. They don't know if it's a public key or a private key or it's a home key or an office key. So you got to give them a wallet that behaves similar to Facebook or Google or whatever, where they they forgot their password, they can reach out to somebody, they can reset, but you give them the utility that they want. They want two utilities: store value, yield. If you can give those two in a wallet and allow them to select the assets that they choose, for example, okay, I want to have a little bit of Bitcoin, a little bit of Ethereum, and a few stable coins. Then you're giving them what they're looking for. So our focus has been always you can read a white paper from 2017, has been to bring the next 100 million people into crypto, convince them to unbank themselves, leave their bank, take all those assets, earn yield, protect the assets against inflation and debasement, and get to financial independence. That's our mission, right? So we're not trying to have all the Bitcoin maxis convert them into yield lovers. You know, that's not our job. So we don't pick winners and losers. We're not here to cheer for Bitcoin or Ethereum or Litecoin or Cardano. Our job is to let the customer select the projects they like. If you're 100% in stable coins because you believe in the fiat system, great, no problem. We will pay you 8.8% on your stable coins, and you don't have to ever interact with Bitcoin or our token or anything else. But going back to your original question, so there are three tracks. One is just come and earn yield. The second one, get extra with our token, the Cell token. It happens to be the best performing token last year. If you look at Messari 2020 report, the number one by far, the best performer by far in 2020, over 4,000% ROI was CEL, the Cell token. And the third track is that unlike Coinbase and Uber and Google and everybody else who never allowed, even though you created the value for them, they never allowed you to participate in the equity of these companies. They blocked you from coming in. Every time we do a raise, even if it's internal, we include the community. So the last raise we did, we invited 2,500 of our customers showed up and said, I want to invest in Celsius. And over 1,000 of them got to participate and sit on the bus right next to me and right next to my employees and own equity and participate in the value creation in the company. So that's another piece of Costco, right? Imagine Costco offered you every time you shop, they said, here is your stock certificate. Thank you for shopping here. You get to own a piece of the company for that. Here's your token. Thank you for shopping. You also earned 1,000 tokens, you know? So we believe that that's how you build a community. You align the incentives. To your question, how do you align incentives? You let people sit on a bus next to you. And then you as a coin holder who's earning interest, you as a token holder, you as a shareholder, you all have the same incentive. You all have the same alignment. And that's how you build a great company.
So, okay, last question, a little bit personal, but your dopest asset is not Bitcoin or Celsius token, it's your time. And I'm curious why you, out of doing everything you can, what about this mission and the vision excites you so much about like why you're doing this project and leading Celsius?
So if you look at my 35-year career, Celsius is my third unicorn. It's my 8th startup as a founder. So it's not like I did this, this is my first rodeo. And, this country has been exceptionally generous with me. Obviously made me a rich man, made me very successful. And I feel that I owe it more than it gave me, right? So I was thinking about, okay, how do you give back? I tried to do charity, I tried to do nonprofit, and I was just miserable. I tried retirement, none of that stuff made me happy. And then I said, well, what if I build something that should outlast me, something that is, again, an institution that always acts in the best interest of the community, because we don't have anything like that. We have 100% for profit, where the more greedy you are, the better. The more crazy you are, the better. That's how we look at our heroes, the most greedy people on the planet, right? Those are our heroes. Or the other option is you are completely on the opposite side. You work for a nonprofit, you don't care at all about profitability or sustainability or whatever. You just have a mission and you run for the mission. And I said, wait a second, that's not the two options. There's got to be an option in the middle where you can do everything in the interest of the community. But instead of measuring your success based on profit, you can measure your success based on contribution to society. So our contribution to society is allowing people to reach financial freedom, financial independence. And we have hundreds of people that basically became millionaires because they followed this recipe for 4 years, right? They followed the recipe of just saving, letting your savings accumulate, let them compound, right? Not take any risk. We're not talking about taking huge risks or buying some token and hoping it's going to moon or whatever. We're talking about just earning compounding interest that basically you cannot get anywhere else, right? And now their monthly income or the weekly, we pay every Monday. So it's their weekly income is actually sometimes either supplementing their income or in many cases is enough for them to live on, right? Which is something that you will never get from your bank, from your insurance company, or from, in most cases, from your financial advisor. So because they just don't have these products, right? They will never offer you 8.8% on your stable coin. It'll be like, stable coin, what is that? Can you teach me? You know, so these are the things that I'm passionate about. You know, I do an AMA every Friday. I share with everybody the good news and the bad news. And we are a fully transparent company. So we publish how many users on the platform daily. We publish how much do we have in assets. And if the numbers go down, we tell you, you can see that, right? We also announce what we call proof of community, where you actually can track, not just to see what you earned and verify that on a blockchain, but you can actually see everybody in that BTC pool, everybody, what everybody earned, including what Alex earned, right? You can't see their names, but you can see who else is in the pool with you and your ranking in the pool. So the equivalent would be you going to your bank, taking a paycheck, walking into the teller, slapping it on the table and saying, here is my money. Now I want, before you deposit it, before you take it away from me, I want to know who you're going to lend it to, how much you're going to charge them, how much did you earn? Did you have any bad debt? How much am I going to get out of those earnings? And I want to know everybody else in the bank who gave you money. I want to see what they earn to make sure that I'm getting my fair share. That's equivalent to what Celsius does every day. And guess what? We don't charge any fees for that. There's no monthly fee or annual fee or inactivity fee or any of those things, right? We just take a piece of what we earn and we keep it to run the company, and you get the vast majority. On average, you get about 80%, up to 80% of what we make. So that's the magic of Celsius.
Love it. Okay, wait, I lied though. Bitcoin energy usage. What do I tell the haters about this? Because this is something, as like a fan of sustainability, a Tesla bought Bitcoin, super pumped about that. But what do you tell people about the energy usage of crypto networks?
So let's compare Tesla to Celsius, to Bitcoin mining. Okay, Tesla is a 100% green company and a 100% green car, but the car uses all of its energy from your outlet, from your grid. Guess what your grid is? Less than 50% renewable, right? Now let's look at Bitcoin. Bitcoin automatically, because Bitcoin doesn't live next to your Tesla, Bitcoin goes to where the cheapest electricity is. And today, the cheapest electricity is hydro, wind, and power. Those are cheaper than coal or natural gas. So the Bitcoin miners, we are one of the largest miners in North America. We put the equipment right next to the hydro plant, right next to the wind farm. And the vast majority, about 76% of what we use is renewable. So if I'm using 76% renewable energy and your Tesla is using 43% renewable energy, which is the average in the United States, who is more green, me or your Tesla?
But people would say my Tesla gets me from point A to B. The energy that secures the crypto network's useless. So why do we need so much? Like, why are is it worth 3% of our humanity's energy to secure these?
If it was useless, it wouldn't be worth $2 trillion, right? The entire crypto community obviously has a $2 trillion. Most people don't even know how many zeros are in a trillion. So 12, right? So how can it be worth 2 trillion and you at the same time you're saying it's worthless? So every network has a cost. The internet has an energy cost. Your bank has an energy cost. Your Visa, when you swipe your Visa card, guess what? There's an energy cost, because the entire Visa network that runs worldwide has tens of thousands of servers and hundreds of thousands of employees, or driving gasoline cars to go to lunches and do all kind of stuff. So everything has an energy cost. Now, the people who say Bitcoin is dirty, guess what? I guarantee you that if you dug through it and find out, okay, who's actually shilling that FUD, you would find out that it's originated by either banks or financial institutions who are just terrified for their lives because suddenly there is something that's going to come here and replace them. And there were several surveys that were done showing that the Bitcoin network consumes less than banks consume on an average day, right? If you did comparison between the two, banks consume more energy than the Bitcoin network. So I definitely don't think that that's an issue. But let's just look at the other side of the coin on this conversation. Let's say that when we were creating the internet, I was there in the beginning. I helped create Voice over IP. Every time we would want to put fiber into the ground to grow the internet, somebody would scream at us and say, "You cannot dig my street. What are you putting this fiber for? It's completely useless. What are you going to use it for? So people can talk to each other, they can send messages to each other? That is a complete waste of time. We have the phone company. We don't need the internet. Okay, just use your stupid phone company." That's the analogy of what we're going through today. So you want more renewable energy, create more demand for renewable energy. If Bitcoin doubles the demand for renewable energy, what do you think they're going to build? They think they're going to build a coal plant? They're going to build more electric, more solar, more wind, more hydro. That's what the investors are going to build. No one is going to invest in another coal plant. So by increasing demand, because of Bitcoin, because of computing centers, because of artificial intelligence, because of all these new tech that you teach everybody about, we are creating more renewable energy, right? Tesla is creating more renewable energy. All these things creating more renewable energy. So electrification of the world is happening with or without Bitcoin. We're just accelerating it by maybe 5%. That's all we're doing, right? So for all the naysayers, all the people are poo-pooing on as if Bitcoin is causing global warming. I mean, come on, guys,
Wow. Awesome. Well, I don't want to take up more of your time. This was so fun though. Honestly, thank you so much for coming on the show. Like I had such a blast and I can't wait to follow more. I feel like I'm going to become a Celsius customer. So I'm going to make a whole new video when I do that. But I'm just so excited. Perfect. This actually was really enlightening. So seriously, thank you.
Perfect. And let's do it again. Have your experience. Let's compare notes. We're always looking also for feedback and to make sure the service is better and how to make it better and so on. So I'm definitely excited to continue the conversation and I'll see you soon.
See you soon. All right. Thank you so much. Peace out, everybody. Thanks for tuning in.